So, welcome back. We are here looking at the commodities market and the precious metal market, and we'll start by looking at the US dollar index. And as you can see, we are running into quite a lot of resistance right underneath the 50 moving average. And that is problematic, especially for most commodities and stocks and indices as well. I was hoping for a rally towards the 50 moving average, break the 50 moving average as well, because that would be quite interesting for especially gold and also for oil at this point, because oil will go down, which is expected, and it will pressure the price of gold down towards the 1800 level, which would be amazing entry point for gold. But these technical indicators are not looking very strong at this point. They are turning around, especially the CCI and the stochastic are showing signs of weakness. And the reason for this is if you look at the 4-hour chart, we are running into this 50 moving average here, which we have problems breaking. And we have tested it several times. And usually when we test something this often, we break to the downside. So it's very likely that we'll go down to this area at 92 and probably down to 92.1. We can also look at the 1-hour chart. We are basically bouncing off this 50 moving average, running in technically resistant all of the in this area. And it will be interesting what happens when these two moving averages get closer to each other. Whether or not this 50 moving average completely turns around and then we'll head to the downside, that is basically the indication that we are going to go much lower. And these technical indicators are also indicating that that is going to be the case. So keep that in mind. Keep an eye out for the US dollar index, because it's a negative correlation between the US dollar index and commodities, precious metals, and so on and so on. So let's look at oil. So I've been hesitating to enter this market. We can conclude that this is the very highest of this market. We did not even get close to it, and then we broke down with this very nasty candlestick on Wednesday. No, this was on Tuesday. Oh, sorry, this was on Wednesday. So this was basically. Then we have basically broken down further, and at this point, I would not, in normal cases, I would not hesitate to basically enter this market. But I am very. I need this candlestick here to go even lower before entering this market, and the reason for this is basically there's so much noise in the market. You get news similar to this, and then you see basically this happen. This is the coronavirus vaccine, which at this point is very doubtful whether or not it is real or not, whether or not it's going to be approved, when it's going to enter the market, how effective it's going to be. And then you have the stories about the CEO of Pfizer basically selling his stock in the company that is supposed to start earning billions and billions of dollars selling this vaccine. That makes no sense. So we have had a lot of news about vaccines, and it's a lot of hype. You see the market go absolutely bananas to the upside, and then 1, 2, 3 days later you find out, oh, it wasn't that good as we thought it would be, and then you completely collapse again. And what we're witnessing here is most likely a similar case. Demand in the world economy just isn't there for a price above this price level here at this point. Even though we get a stimulus, we have had 3 stimulus already, or 4 stimulus already, nothing has happened. In this period here, we had a lot of stimulus, nothing happened. So we get probably a little bit of bounce, but this market is going to go lower. The first target here is the 50 moving average at $39, 39.5. If that breaks, we'll go all the way down to the $37 and then to $33. My interest basically is to start shorting here. To enter the market here, target first of all this area. So to target this area at 39.5, and with a stop loss at the very highs here. So that is quite a risky trade because we could turn around here. That is very possible that we turn around at this point. So I need more indication that we are going to go lower. After that, we'll go and target this area. And this should be significant support because in the past, this was also significant support. We can look what is happening in the 4-hour chart, and you can see that it is looking very negative for oil at this point. And you can see that we are most likely going to target this 50 moving average, which is exactly at the around $40 range. So just keep an eye on oil. It is possible that I'll make a signal in order to sell oil at this point. But if you look at the 4-hour chart, we are having a problem here because we also have this. And this is a major trend line in the 4-hour chart, a support line. So we need to break this. We may bounce from here. And that is not a good indication because that basically means that we are making higher lows in the 4-hour chart. And that could send this market significantly higher. And if, for example, US dollar starts to depreciate, then that is an extra worry for this market because then it can go higher. So it is a risky market to enter. So if you look at natural gas, we can see that we have to go on the daily chart. We can see that we have pulled back yet again. We were rallying. I thought we were going to go significantly higher. So we were rallying for 2 days. It was quite a nice trade. So hopefully everybody made a little bit of money off this trade. But now we have turned around towards this trend line again. At this point, technical indicators are starting to look very dire for this market. So it may well be that we'll test this, stay around this area for some time, or break it and go towards the 50 moving average. At that point, if we turn around there, then of course I will enter a trade. We'll have a stop loss around underneath here at 2.7, something like that. And then we are going to target the highs here. And after that, the very highs here, 3.38. We're entering the cold months of the year, and that also always has a boost for natural gas. So this is basically my plan for this market going forward. So we have I have done a few changes to the commodities analysis. One of them is basically I dropped copper because there's just not any trade in copper at this moment. And I have also dropped platinum. So there's also no trade in platinum at this point. So until things change in those two commodities, I'll basically leave them out of these trades because it'll just be more of the same, and I won't enter a market neither with a buy or a sell whatsoever. So the new is Palladium. I hope I pronounced this Palladium. I pronounced this right, because this is a much more interesting market. First of all, we have this massive trend line here, which will act as major support. And at this point, we are trading just at the 50 moving average. So we have the possibility of basically bouncing off the 50 moving average or bouncing off this trend line. And that is quite a nice trade. So the very highs here are at 2.5, and that is where we basically will target. If we drop towards this trend line, then that is a buying opportunity, and the target will be these very highs. What we'll do, or what I will do, is basically I will add a short or a stop loss right here, because these areas here are looking very supportive, probably a little bit lower than that, around there. So if we go down here, stop loss is right there, and we'll target this area here. That is my plan for this trade. but it will probably take some time because I don't know if it's going to bounce from this area or going to bounce from this area, or if it basically breaks through the entire thing. We need basically a indication from these technical indicators that we have reached the bottom and that we are going to go lower. RSI is still at 39, so there's a lot of room to the downside. But this is a market that looks very predictable. We are in an uptrend here, and we have not a lot amount of volatility in this market. It is fairly predictable and therefore very interesting, basically, to trade. We are trading, it looks like, up towards this corner here, and that is also a very interesting trade. Do we basically break out to the upside, go and try to reach these highs again, or do we break to the downside and go and test these lows again and even lower to these lows? So that is to be seen, but this is definitely a market that is interesting to basically to start buying. So if you look at gold at this point, gold is basically trading sideways. It has been doing that for a few days now after this massive breakdown, and we are still waiting for gold to go a little bit lower. It is not a good idea to buy gold at this point. It is not a good idea to sell gold at this point. It is a lot of waiting around. Technical indicators for gold are quite flat, all of them. And at this point, we need gold to break down towards the 200 moving average, or specifically the 1800 level, which is also this area here that we want to basically test again. And when we do, that is where we enter a very long position. What I'm going to do is basically I'm going to put a stop loss right underneath the 200 moving average, because if we enter here, then we have a stop loss right under there. And the target for this market is high. It is way up here. It's way up here in 2,300 is the long-term target. So it is all the way up here. So this is basically from there to there is basically what we will target. And that is a lot of money for one trade. So you look at silver. Silver is very similar. We have a lot of resistance above the 50 moving average, and we have a lot of support around the $22.6 range. We need a break towards the 200 moving average around the $20. And until that happens, it is not a very good idea to enter this market. We can break to the upside. We can also break to the downside. The real trade is a long trade where this enters around $20, $21, something like that. And we basically need these technical indicators to go more negative to the downside before we can enter this market. But these are both for silver and gold. I am very bullish in the long run because I know that the central banks are going to flood money with the markets with cheap liquidity from now on, and that is of course going to be very bullish for these two commodities. So we look at Kakoa. This is also a very interesting trade. We are with the highs here of 2.6 and the very lows at 2.0. And of course, we have the mid-range here of 2.2 and the highs of the mid-range of 2.5. At this point, we are bouncing off the 50 and 200 moving average. We rallied up to the 50, down towards this support area, up towards the 200, and now again we are probably going to break this support area, and if that happens, we'll go all the way down to the very lows. This is a possible short. It is. It is not a trade that I would do, but I would understand if somebody else would do it. But in this case, because we have such significant resistance above, it is very likely that we are going to go much lower. Even though we go rallying up from here, it will still be resistant, and then will drop towards these lows and then the very lows. My trades are always based on the very edges of the markets, and that will be these very lows in order to enter a buy, and these highs in to enter for a short. So that is my plan, and this is, as I said, a possible short because it looks like we are making lower lows here, here, and then we're going down here or very lows down here. So technical indicators for this are looking very negative. So this is a wait, and I'll say when I basically enter this market. So if you look at sugar, sugar has rallied at this point, and it will most likely take some time until we get where we want this market to be. So we are trading within a very short range here. We probably go a little bit lower within this range here, and until we basically drop towards this bottom here of 0.13 or the 50 moving average, it won't be a very interesting market to enter. We subsequently have a major support line right here, and that's actually the more interesting trade. We could bounce from the 50, we could bounce from this trend line. I would prefer the trend line because there's more profit in it. I would basically put a stop loss right under here, right underneath the 200 moving average, because I know the 200 moving average would also act as a major support at this point, and therefore probably a little bit more riskier to the downside, but at least this is support, this is support, and this is support. It would be highly unlikely to go through all of these support areas here. So stop loss here should not be tested whatsoever. And what we would target is basically these highs. So 0.5. So bounce from here up towards 0.5. That is basically with a stop loss right underneath the 200 moving average. Technical indicators for this are all over the place. So this is basically a wait, drop towards the 50 or the trend line in order to buy for a target of 0.1515. So if you look at wheat, which is a really interesting market at this point, so we are on the edge of this market at this point. We are right here testing the support or the trend line. We have the 50 moving average right underneath. The only problem with this market is that the technical indicators are very negative. I would be interested in entering into this market with stop loss around here, and would target the highs up here. So this would be a very nice trade. However, technical indicators for wheat are looking very dire at this point. If you also look at the 4-hour chart, they are even more dire. So we need these indicators to basically turn around before I would have any interest in basically entering this market. We are still testing this trend line. So keep that in mind when these indicators on the 4-hour chart, especially the 1-hour chart, start to really turn to the upside. They're still not yet. They're all very negative, but we are oversold on the 1-hour chart. So that is a beginning. When this starts to go up to 30, 40, and so on, the 4-hour chart will also look more promising, and then the 1-hour chart will also look more promising. Because the 1-hour chart is oversold at this point, it is highly likely that we are going to bounce from here, and that is also a possible trade. So last but not least, it is cotton, and I chose to take cotton because it is bouncing off the 50 moving average, and it's also trading within a channel. So we have this lower trend line, and we have this line here. We have this upper trend line around this area here. So I like trading in channels. They're very predictable. If you get top of the channel, you should expect a pullback, and so on and so on. That has happened several times here, and so on. And at the moment, we are basically at the bottom of the channel. And as you can see, what happens when we are at the bottom of the channel is that basically we rally to the upside. However, technical indicators for this market are horrible. We're not. You can see that all the MACD, the stochastic, and the CCI are very negative, and we are not even close to being near the bottom of the RSI. We're not even there yet. If you look at the technical in the 4-hour chart, we are also very negative. We are almost oversold in the 4-hour chart, and that means that we should be oversold in the 1-hour chart, and that is also what we are. So we are about to turn around on the 1-hour chart, and that is very promising. We are oversold 26 at this point. So when this turns around, starts to be the RSI starts to increase above 30, and goes to 40, then the 4-hour chart will also look more promising. It will start to test this 50-moving average, and that is the probable sign that we should basically enter this market for a buy. And when we are into this market, I will have a stop loss underneath the 50-moving average, and I will target these very highs of 0.7239. That's quite a nice trade to that upside, but we need these technical indicators to turn around a little bit before we can enter the market. So, hope you find this interesting and helpful. You're welcome to ask me any questions on Patreon if you have any questions about the trades. And otherwise, good luck and thank you very much.